Valecha. I'm the Chief Investment Officer for Century Financial. I'm basically from India, Mumbai, but actually been born and brought up in Dubai. So yeah, pretty much a Dubai kid. Well, we have seen in the last 8 months that cryptocurrencies have fallen more than 70%. Again, when I talk about 70% fall, it's only for the major ones like Bitcoin and Ethereum. Ideally, we have seen altcoins fall more than 90%. But that's not just the case for cryptocurrencies, that actually has been seen across technology sector in general. We have seen companies like Palantir, Shopify, Upstart also fall by 80% this year. So it's actually that all technology sector is being beaten down because of the hike in interest rates is one major factor. The fact that valuations were extremely overstretched and probably even now overstretched, and that could be a factor for even a further decline that could be coming in the next at least few months. See, we do look at geopolitical situation as a major factor, but it's not the only factor. Currently, the biggest factor is the inflation. I mean, they have printed so much money across each central bank around the world, it was bound to create inflation, which again, because the inflation numbers are so high, will lead to deflation next year. So yes, this fall that is coming in the markets is probably right now for the end of this year and might start picking up again from next year. But again, the portfolio that you look at for a balanced portfolio will be more of a conservative one than an aggressive one. Most likely see people get into cryptocurrencies and everything else is because they actually enjoyed the volatility. They enjoyed making gains of 10%, 15% on a weekly, daily basis, sometimes hourly basis also. So yes, it was a scary scenario, but when people are looking for such returns, they should also understand the risk is always involved with returns. So of course, when you're looking for 10 or 15% returns weekly, you're looking at 10 or 15% declines also weekly. A balanced portfolio in today's time would actually be to comprise not just of cryptocurrencies, because you can have probably 5% of a portfolio in digital assets overall. So it'll be not just cryptocurrencies, NFTs, or any other digital assets that you actually want to earn. But the idea is your other portfolio should be a balanced portfolio where you're looking at defensive sectors like FMCG, you're looking at sectors like food, you're looking sectors at supply chain, because see, the disruption in supply chain is big right now. So we will definitely see an increase in products over there, and not just technology. What most people have actually gone wrong in, and that's why they're suffering this time this year, is only because you cannot have a 100% portfolio based on technology. You have to have companies like Bank of America, MasterCard, even Coca-Cola, McDonald's on your portfolio. Might not be the most prolific stocks. They don't do as well in good times, but then they give dividends of 3-4%, and that is actually good enough right now. Well, my portfolio is kind of boring. Most people don't like it. It's because I like dividend stocks which make 5 to 5.5%. I actually like growth stocks which grow at 10 to 12% per year. I'm not looking for really fast returns. I advise most of the people also, if you can make a decent 10 to 12% return, it's a good number to have. Keep a balanced portfolio. Stick to the basics. Don't really go too harsh on something which is absolutely new. Let it prove itself. Again, when you're getting into something which is absolutely new, something like cryptocurrencies or something like SpaceX, you can definitely go in, but you can't have your large chunk of a portfolio. Taking a 1% risk is not a bad thing, but taking 100% risk is definitely scary. Right now, I think the best sector to look at, or best industry or country to look at, is probably China. I mean, we saw in 2008 recession that China actually took the fall in 2007. US and Europe in 2008, and UAE probably actually saw the recession in 2010. So it's been similar. We have seen China markets go down by 50% last year already. We are seeing the US and European markets do poorly now. And of course, we are seeing that real estate is still really doing really well in this part of the world, and is already starting to suffer in Europe and in US because mortgage rates have been 5.5%. China is not increasing interest rates at that alarming rate. They have already done what they had to do last year. So in emerging markets, I think China is definitely a sector to look at. Stocks like Alibaba, Tencent, JD.com are actually at really good discount prices. India, also not too far behind, I think is definitely an emerging country to look at for investing. But again, most of the people who have actually got into India have gotten the private equity side, which might not be the safest right now, because just like real estate, they're slow to react to market conditions, and they might start falling in from next year. So actually what to get in is the big large cap space. Companies like Reliance, TCS is not actually bad to even enter right now. And again, any portfolio that you're building, whether it's just going to be emerging markets or whether it's going to be balance between developed and emerging markets, it has to be done on a systematic plan rather than just invest and do it on a daily basis. Definitely a lot of changes. I mean, we are seeing demographic, and especially in this part of the world, in UAE, we actually see that it's a really fast and really dynamic environment. We actually used to have when I started working in 2008, we used to actually have 98% men coming in for opening accounts to actually start investing. That ratio from 98 has become now 80-20. So women actually are taking a lot of involvement, not just in earning but also in investing, also in planning retirement. So that is something which has really come in. Most of the education funds are actually women who are starting their education funds. It's retirement funds, also women actually taking a much more better step than men are doing. Similarly, we are seeing different demographics of people also coming in. So of course, the UAE is a very dynamic environment, and that's how we always see demography change. So idea is that we are trying to improve ourselves every day. We are right now going towards majorly, again, we have been a UAE based company. We are trying not to lose focus on that. We don't want to get in on really big markets, where our idea is to get on bigger markets in the GCC itself. Saudi Arabia is definitely a focus. It's become a much more open economy now. It actually is welcoming people to actually come and get investments, and not just investments for the Tadawul, but actually across the world. They actually have better diversification than most countries in the world do already. Ever since they have launched the Aramco IPO, they have been such an open economy, and those positive changes are definitely what we are trying to get in on. Besides that, Bahrain is doing really well on the cryptocurrency side, but not just on the cryptocurrency, but actually on the digital asset side. So that is a really positive change as well. I think GCC is doing really well, and our focus is going to be GCC.